Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing you want to do is open up any equities underlying in your brokerage platform. We've just got Docu up at the moment, DocuSign, and you want to navigate to see the list of expirations for that underlying. And the purpose of this step is to lock in on an expiration date that we're going to use to mock up positions moving forwards. And the expiration date that we're going to lock in on needs to be between 30 and 60 days out in time. And it also needs to be a monthly expiration, not a weekly or quarterly. So the only expiration date that fits that criteria right now is January 17th, which is 43 days out in time. So we can take that information, come over to our watch list, and simply filter out any underlying that has earnings over the next 43 days. And we can also filter out any underlying that has a low liquidity rating level. Now, this watch list is a futures watch list. We're not going to be going over futures today. Let's have a look at another watch list, 52-week near high. As we can see, we've got TIVA at the top, EPD, AMCR, and basically the purpose of having your watch list is you want to have multiple watch lists, in my opinion. You want to have multiple. You don't just want to have one. I personally like to order my watch list from high to low IVR. The reason for this is because we are playing the contraction. Volatility is a mean reverting product. So we want to sell when volatility is high and play the contraction back down to the mean and hopefully further below that as well. And at this stage, we want to um, find underlyings that would fit well inside our portfolio. Um, if you're heavy in any one sector, maybe go with something else. Don't look for more underlyings in that same sector. Use common sense. You can use beta weighting. You can look at the correlation between the underlying and the SPY. But overall, as long as you're using common sense, you should be absolutely fine. So we're just going down this list. XLB looks like it could be good with an IV rank of 45. We've also got Coin, trading at just over $330 with an IV rank of 44.1, an absolute IV level 87.2%. Bitcoin did hit 100K just recently in dollars. So I think we'll have a look at Coin. The market is currently closed. It's pre-market right now. Market's not going to be open for another 45 minutes or so. But we're just going to see if we can mock up a position on Coin. Of course, we know we're going to be at the January 17th expiration date. And this here is the options chain. And we want to sell one call and one put, which is what we always do. Let's keep it very simple, very easy. And we'll sell it at the 21 delta. Anything between 15 and 20 deltas ish is fine. So we've got a 21 delta on that side, and we've got a 20 delta on the put side. That basically gives us a range between 290 and 460. Now, we would collect $2,374 upfront in premium. That is non-refundable. We keep that no matter what happens. Our broker is going to require just over 19 grand in buying power to open this position. Now, you might be thinking 19 grand, that's a lot of money to open on one single position, and you are right. So for most people, what you'll have to do is buy another contract a little bit further out, say $10 wide on either side, between 290, 280, 460, 470. And what that's going to do is that is going to limit our loss. We have now defined our max loss. It is no longer unlimited. It is now limited. And what is it? How do we define a max loss? Well, it's the difference between the two strikes, between the short and long contracts, which is $10, minus the premium that we collect up front because that's non-refundable. And what's left is our max loss, which is $698. And our broker knows that that's our max loss, so it's only going to require the max loss, which is $698 in buying power. So we've taken a over $19,000 requirement and brought it all the way down to $700 or below $700. And in doing so, we get a much higher return on capital. As you can see, we're risking 700 to make 300, much higher return on capital there. we've got a 74% chance of hitting 50% of the max profit, which is $300, over the next 43 days. So we've got a 74% chance of hitting $151 of profit at some point in the next 43 days. So very, very high probability of success here. And we'll get a daily theta decay of $4.5. Now, how do you know how much buying power you should be allocating to your positions? Well, we've got a free position sizing template. The link is in the description. Just click on this button here and it will take you to the spreadsheet. The way it works is you enter in the size of your portfolio at the top. So let's say you've got a $50,000 portfolio. Let's say the VIX is currently at 15.7. And then what will happen is everything below will then be automatically calculated for you. And as long as you follow this framework, you'll be absolutely fine over the long term. It will tell you how much the maximum amount of buying power you should be allocating to any single undefined risk position, defined risk position, how much of your portfolio you should be allocating to short premium strategies in general. And as I say, as long as you follow this, you'll be fine. There's also an explanation here as well, and a little table of your portfolio allocations in relation to the VIX. So link for that is in the description. It's completely free. If you want to learn in more detail, again, link in description. This time click on EDS Premium. Get yourself signed up. Inside you'll have access to our portfolios that will allow you to see what positions we're placing, how we're managing risk, and the adjustments that we're making all in real time. There's a full course inside as well, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. This allows you to see learn the theory and see the practical applied in real time. So also, if you get stuck, there is a private community, so you can speak with myself directly or with other like-minded individuals. There's also a 100% money-back guarantee. So once you have studied our full course and followed our trades for at least 6 months, if at that point you haven't been profitable, we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free on your part. And right now, it is only £1 a month to join. The price will be going up, but once you're in, you're locked in for life. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.